Okay, so we're starting on time. I think we'll just go from top down for introductions. Quick introduction on me, I guess, before I pass it down to the panel members. Dave Trong, Arlington Capital Advisors. We're an investment bank, M&A and capital raise, so I pay attention to their stock prices and strategically everything they're doing.
Hi, thanks for coming. Mark Vendetti, I'm CFO of Glass House Farms. Again, just real quick on Glass House. California-based, only do business in California, vertically integrated, have three, I'm going to call it primary brands. Our Allswell is our value brand, just became the largest by volume in California in the flower category, 10 dispensaries, and we have 3 cultivation facilities, combined roughly 6 million square feet of cultivation. We're about 40% built out right now, so a lot of opportunity there.
Thank you. Hi, I'm Christine Hersey, Vice President of Investor Relations at Trulieve. We are a large vertically integrated cannabis retailer. We have 216 stores company-wide with 152 in our home state of Florida. We have over 4 million square feet of production capacity, and we are right now preparing for Hurricane Milton and the election in November.
Hi. Juliana Patera, Vice President of Investor Relations at Verano, also a vertically integrated multi-state operator. We pride ourselves on our very diversified portfolio, so we've also got a really big footprint in Florida, which we're proud of, well over 70 dispensaries, but over 150 dispensaries nationwide across 13 states.
TJ Cole. I am VP of Corporate Development and Investor Relations. I've been with Cresco for over 5.5 years. The majority of my time has been more on the corp dev M&A side, doing our transactional work, and more recently stepped in investor relations. Cresco Labs currently operates in 8 states. We have over 72 dispensaries and counting coming here soon, and we're the leading operator, #1 share in $3 billion plus markets in Massachusetts, Pennsylvania, and Illinois.
So given the headline of the panel, let's just start off with a temperature check on capital raising, debt and equity. What are your thoughts? What's the vibes these days?
So I think the good news is that the rescheduling has picked up momentum. The sentiment toward cannabis in general has improved. We have had we're talking to more people now than we've ever talked to in terms of potential looking at debt to replace our preferred equity, discussions on whether we want to go to the market and raise equity for our expansion. So the environment is, if it was a 2 in 2022 or maybe a -2, we're moving toward a normal market as though cannabis is a normal industry. At least that's the feeling we get at Glass House.
On the debt side, I think we've continued to see an increasing amount of lenders, especially in the U.S., who are willing to lend to cannabis companies. We've seen regional banks participate in greater size and with relaxed terms, I think, over the last 2 years or so, especially with commercial real estate-backed collateral. So it's been positive and continues to loosen on the debt side. The equity side is a little bit of a mixed bag. We still have not seen a lot of new capital coming into the space. I think most of what we've seen is rotation between names. New institutional investors still aren't really reaching out to learn about the space at this time. We have seen a general uptick in individual investors and also in employees asking about our stock.
We'll reiterate some of the positivity on the debt side. I mean, obviously we're in a falling rate environment, which is good. Though at Verano we say over and over, we never run the business based on any assumptions based on federal legislation, and I think the same should be said on the debt side. So you never want to be thinking about raising debt assuming, it's going to be 100 basis points lower next year, because God knows those consensus numbers have been so off on guessing when we'd have our first rate cut. But to their point, we've been seeing some picked up interest on the debt side, some slightly new names, which is really great, because I know we've got kind of a tidal wave of debt maturing in 26. So a lot of us are starting to, I think about some of that refi. But equity, same. It's kind of Same malaise, I would say. We're incredibly happy when we can have discussions with new institutions that are just, dipping their toe in the water, wanting to understand the industry. But most are so far from actually deploying dollars. We've heard, we want to see your stock 3x before we're even interested, from like a big blue chip name. So we know we have some far way to go. But again, we're just embracing every conversation we can get so that they're familiar with us, when the time comes, and when it comes down to is when their compliance departments let them deploy dollars.
Yeah, at the risk of repeating everyone, I think, echo a lot of it. I think the debt markets have definitely strengthened and tightened. I think it's all relative, right? Probably the larger companies at scale that are seeing probably a lot more of that positive momentum, and new investors on the debt side starting to show greater interest. I think the equity markets are still suppressed, and I think that's kind of where you see the debt markets have maybe started to price in more of that rescheduling news, where the equity markets are still somewhat hesitant and more of a show me story. So, but yeah, overall positive.
And so you all kind of touch on this. So on the equity side, what gets more investors to go from education to actually deploying capital? On the regulatory front, it sounds like it's rescheduling, but let's assume that happens because there's momentum. How much does that change sideline investors to come in?
On the debt side, I mean, Charlie and I talk about this a lot. We call it a little bit of mission work, right? So there's definitely a lot of education, especially for new investors, that you have to go through. That's definitely a long lead time. So for those blue chip investors or those new lenders, right? That is a long kind of pull in the tent that takes a decent amount of work to make sure they're getting familiar with the industry, familiar with your company. On the equity side, I don't know if we're necessarily expecting too much of a shift in terms of a significant uplift in new investors just from the rescheduling news. I think that takes kind of a broader reform to happen to see, a significant lift on that side in terms of new money coming in.
So not that I want to bring it up, but I guess I have to. Is that more, safe banking, or what other regulatory things would actually impact it more?
Yeah, I mean, from my opinion, it's some form of safe banking, right? Rescheduling doesn't necessarily get those groups across the finish line in terms of what they need to get into the space.
So just to, hopefully the rescheduling is a domino that starts a chain process, right? So, 280E going away is going to be a huge impact because all of a sudden everyone in the space, their cash flow is going to be dramatically improved, right? So by default, we're all better credit risks, so that means it's easier for any of us who need to go off and borrow money, or now it should reduce multiples per se, and that makes it easier, right? Your equity looks more attractive. So that's the first step. Then if that helps with, safer banking, right? From a consumer perspective, I mean, we'd love consumers to come in and be able to use a regular credit card in our stores. And these guys have a much larger retail presence, so I think it would be really huge for retailers, right? One of the other considerations too is there's lots of chatter around uplisting. So if you get rescheduling and then, a revised Cole memo or a Garland memo, does that open uplisting to a major exchange, right? So we're keeping our eye on all of that stuff. But the first domino really is got to get the rescheduling done, and hopefully that paves the way for more positive capital market activity in 2025.
I think our hope is off. I think rescheduling looks like it's very likely, hopefully, it's safe to say. And then once that has kind of the attention of legislators, hopefully that happens around the spring, it seems. Maybe on the coattails of that, we do get a safer banking type thing. What we've heard, we talk to the exchanges incessantly, and it's absolutely not rescheduling is going to do it. They need like an anti-money laundering, something tacked on to a safe or Cole memo, something like that. So I think the hope is, we're in the headlines in the spring with rescheduling, and safe gets attention, and there's anti-money laundering discussions with that, and that gets baked in, and then I think there's an actual possibility of uplisting.
Oh, I was just going to say, I do think there might be a little bit of incremental progress, though. If we do get some state catalysts to come through, to your point, removal of 280E is like putting a glamour filter on all of our financials, right? We're going to become instantly profitable. The cash flow is going to look a lot better. It is going to make us look more investable and more attractive. And that would be something that would be a permanent change, which would be a nice win for our industry to have. And I do think there would be a little bit of momentum in that. I agree with you. I don't think we're going to have a massive unlock of institutional capital that comes in on the back of rescheduling alone, because the compliance and the risk departments are a barrier. And the custody issue is still a major barrier there. But I do think money attracts money and momentum attracts momentum. So there's some possibility for some lift in valuations and in trading activity.
So since you mentioned state callus and you're wearing it on your jacket, exactly, Amendment 3. If you guys looked up the stock prices of the 4 companies on the panel here, it's anywhere from minus 27% to plus 127% over the last year. Would love for the panel to speak to that. I think you guys know where you are in that range, and why your stock is where it is on that range.
So we've had a good year from a share price perspective. We try not to look at the share price on a daily basis, because one day it can be up 10%. And the next day it can be down 10% because of headlines. We're pretty simple. Our strategy hasn't changed in the 3 years I've been with the company. We want to grow high quality cannabis at the lowest cost consistently and grow lots of it. And over the last 3 years, we've been able to execute against that. So that's the first thing we've done that's helped. The second thing is, we've talked about expanding. So in our massive farm, we're only 40% built, so we have 60% to go. So if you look at our company, you go, there's a lot of runway left, right? And if we continue to do what we've done, and hopefully that's kind of priced in there. We've talked about trying to find a way to get out of just the California market and using hemp as a vehicle. So I think that's a bit of a catalyst. And then the fourth point is, it's really hard to know how much is embedded in your share price as it relates to rescheduling, right? Some people go, it's $1 and you'll pick up another $1 or $2 if it happens. Some people go, it's 40, 50%. We're really not going to know until it happens.
Yeah, I would say for Trulieve in particular, the team did a ton of work in 2023 and into this year to really improve the operational performance of the business. And I think some of what has driven our stock is just the work that we've done in getting gross margins up and keeping costs low. But I don't think that all of the upside from catalysts such as Florida Rec or rescheduling are priced in. If you look at all the estimates for 2025, no one's including any of, as they shouldn't, right? They haven't come to fruition yet, but there's still a lot of optionality in these companies, and there's definitely potential for upside. I just think to your earlier point about this being a show me psychology, people in the space really just want to see something come all the way to completion before they really come back to it. But there's definitely a lot of opportunity ahead, not just in Florida, but in other states like Pennsylvania. And something like rescheduling would really be the first major federal reform that we've had in 50 years, which would be symbolic, as well as lifting some of these barriers for research and reducing the stigma.
So Verano, we are admittedly at the bottom of that range that you cited. I thank God have a management team that is not focused on short-term noise and is truly focused on the long-term and building the business. We were the top performing from a stock return perspective MSO in 23. So this was candidly expected from my point. Like, it's always cyclical. If you're the top performer one year, it's very unlikely you're going to be the top performer the next year. So we have a lot of upside that we don't think is quite baked into our price at the moment. We're one of the larger players in Florida, and I don't think we get really the recognition for that. So, again, show me story. So we're happy to kind of show investors when the time comes. It looks like Florida will pass. So, showing that really monumental growth that should come with Florida. But yeah, outside of that, we just kind of focus on telling our story. Typically, that's what investors on the equity side want to hear: the long term, the growth drivers. They're especially if you get closer to kind of institutions, they're much less concerned with the short term noise as you start to get some of those truly long term investors.
Yeah, I mean, on the Cresco side, I just don't think the equity markets are necessarily as indicative of the company performance. It's just not there yet, and you have to look company by company and look at the nuances and what's baked in there, right? I mean, I was looking this morning at Cresco's. I think we're down 20% over the last 6 months in terms of stock price performance, and over that same time, we've seen incredible gains in terms of margin improvement, operating cash flow, and free cash flow. So I think it's a lot more that's impacting that in terms of maybe more of the federal catalyst, right? And as that kind of goes through its ups and downs, along with state catalysts needing to kind of come to fruition, right, in terms of some of those key markets in Ohio, PA, and Florida.
So it sounds like from an institutional standpoint, there's a lot of shuffling around. So maybe, someone's in the space, they have a portfolio allocation, but they shuffle from one MSO to another or a few to a few others. And then obviously there are retail investors that continue to come in. So what's been helpful from an IR perspective in terms of messaging to get that story out there? Because it seems like, that's maybe what's helpful in getting your stock on the positive side of that range.
So education for us is crucial, right? And we've got the curse of being in California and frequently hearing people go, I just don't want to invest in California. I don't want to touch it, right? So we just as normal course of business, we hold, we call investor sesh every year. We let investors come in, talk to the management team, tour the facility. So for us, again, we're still not bringing in, I'm going to call true institutional money, but we benefit from word of mouth where, our investors will tell their friends and we'll get them out to visit the farm. And so seeing our facilities is one of the best way to convince people to invest in the company. We had our first analyst and institutional investor day in September. So we're working really hard to just educate people and get them to really understand what the story is. So that's the process. We're more visible now. We go to conferences a lot more than we used to. So it's just getting out there, getting the word out, making sure people understand the story. And again, we'll be positioned when rescheduling happens to hopefully benefit from that at that point in time.
I was going to say, I think going back to your earlier point, a lot of it's just making sure you're focused on your base business. I wouldn't say we're so caught up in the day-to-day in terms of retail investor marketing, right? We're more focused on making sure that we're improving our performance, right? Looking to shore up our core markets, getting ready for AU Catalyst, looking at new market expansion opportunities. And so certainly, the occasional retail podcast from time to time, or making sure we show up to these types of events to make sure that we're still relevant and sharing kind of our latest story is definitely key. But I think it's maybe of less importance right now when it's really making sure that you have the fundamentals in place.
Yeah, I would say we've kind of evolved over the years, and we've tried to meet people where they're at. We have a lot of people who are patients or customers and also investors, people who followed our story for a very long time. So we try and do a mix of events like this or institutional, one-day conferences with investment banks, as well as, trying to reach folks. I like to joke that Twitter is the new equity research. So, meet people where they're at, and that involves going on podcasts or, doing things on LinkedIn or kind of non-traditional media type events and appearances, where we think it makes sense. But to your point, we can't be reactive either to, what the same dozen people say very loudly on Twitter all day either. So it's a balance for sure.
I would say overall, we just try to focus on the growth stories. That's really all any investor cares about. As soon as you report your earnings, that's completely disregarded. Okay, what's next? Where are the next growth drivers? So trying to keep that top of mind, we're always repeating ourselves. We have hopefully Florida coming up. We just got Virginia. So keeping that eye on those growth drivers is super critical.
So that's a great transition to my next question, which is, if you could answer this question, it'd be great. What state are you not in that you're most excited about? If you don't want to answer that question because you can't, then which one of your states you're in today that's not obvious, so not Florida, obviously not California because you're deep in California. What state is that? So you can pick your adventure on those two questions.
Again, we've talked about looking at hemp as a way to expand beyond California. We don't. As we look at our timeline, we probably have until sometime into the second quarter to figure out if we're going to do hemp and where we might go after hemp. So I guess if we make the decision to go hemp outside of California, I guess the answer is whatever state we figure out as we do the biz dev on that side that we think we can get the best return for our shareholders. But we're still primarily on California, and we're a California story until we get true interstate commerce. And the thought is we don't expand our footprint. When we get interstate, we sell our product across state lines, right? So there's no intent on let's put cultivation in Pennsylvania or stores outside of the state of California at this time. We want to be an exporter.
I would say for Trulieve, we don't have one particular state that we have our eye on, but we've repeatedly talked about potential that's going to be unlocked in the future in the South and in the Southeast. I think there's a large section of the country that still does not have access to cannabis, even on the medical side. So there are a lot of new states and new markets to open up and enter, over the years to come.
I think for us, it's definitely Pennsylvania or Virginia. Both of those seem likely to have some AU actually turn on in the next 2 years, hopefully one. I think Pennsylvania is in desperate need of that. They did a little bit of, I think, too many license give-outs in that state. So I think that'll help kind of normalize that state, and we'll see some really nice growth from that. But thankfully, we've got a handful we could really talk about that we're excited about. But I think top two would be Pennsylvania and Virginia.
And, for us, if the question about what markets we're not in, for Cresco, we're only in 8 states. We've whittled that down. We've really focused on our core. Our goals of being the most populous, largest markets. We prioritize having depth, right? We feel like pound for pound, we do that in the markets we outcompete, both on the branded side and on the retail side. And, markets for us that are attractive. We have kind of a lot that we're not in. That's exciting to go after. New Jersey, Maryland, others, right? But I think we're in a really good position where those markets have seen that lift. They're going to continue to get more competitive. They're going to continue to develop and mature. And so from a buy side, it's exciting to see those growth opportunities in front of us and being able to be patient, right? To really go out there and figure out what's the right way to create the most defensible position in those markets, to create scale, to create leadership, and not feel like, we're in a race that we have to get in there. So continuing to monitor a lot of them. There's both developed markets. There's, exciting longer term kind of new emerging markets that have had recent license applications, right? So we continue to look at all of those. And I think we're now in a really good place coming out of, a 2023 restructuring year that we're excited to get back to growth. We've shored up our AU markets, and we're excited to start looking at kind of new markets to expand into.
So we'll answer the question of the subject here, which is predictions for 2025 in the capital market. So we'll have the panel do that before we pass it on to Q&A.
So I'll just, I don't think I'm out of line when I say we expect rescheduling to happen at least by Q2.
You can make it a little spicier on your prediction.
I was going to say then I hope by the end of the year, debt deals, when you see something sub 10, everyone goes, wow, what a great deal, right? So hopefully we will become accustomed to, like, if you're a good credit, you can get a deal done with debt under 10%. And that is more normal as opposed to, oh shit, that was really good, right? How do we get that? So I'm hoping by the end of the year that happens, and maybe we'll get a little extra help with a safer banking or something thrown in by the end of the year as well.
Okay, no surprise here. I have to say that obviously I believe Florida is going to vote in favor of Amendment 3, and then hopefully we'll have a very smooth launch in May.
I hate making predictions because they're just always going to be wrong, especially since our capital markets are so dependent on federal legislation. And so I hope, I would say I hope, I don't think I predict, that a safe banking tax on with rescheduling sometime next year. And then that slowly opens the doors to true institutions.
Yeah, I mean, I would agree with them. I think for 2025, in terms of my predictions, I think we continue to see the debt markets strengthen for the leading MSOs. I think we also see that maybe tighten and get very interesting for those that are maybe over-levered or finding themselves in tough positions. And so I think that'll be, putting my corp dev hat on, an interesting time for potential consolidation for asset to pick up some assets. But yeah, I mean, overall, hopefully we see some good rescheduling news, some positive momentum in terms of what that means for cash flow, reinvesting in our businesses, and continue to see maybe some market growth catalysts as well.
So we'll open up for Q&A. If you want, I don't know if you want to just shout it. If not, take my mic.
Hi, Charles. I wear a few hats, but on the capital side, I have a family office. I'm curious because there's a common hope that descheduling is going to happen, but given the realities of Chevron and certain things on other corollary industries that have kicked out DEA opinion letters, what is, call it, the plan B where descheduling doesn't happen because the moms against drugs or whatever, file suit against DEA action?
Well, I think that's why, at least at Verano, we, again, always ensure that we are running our business that can thrive in today's market. So we're not running a business that has a contingency plan and only survives if we have rescheduling. I think that's a good point. I would say, from my understanding, it's going to be harder to prove how you're hurt in relation to Chevron. So I think that's tougher. I do think that they're doing this, the thing in December with the case. I think that helps protect things a little bit and show that there's been this full process, and it makes it a little bit more insulated against these challenges. But again, that's why you really need to run the business able to operate today and not reliant on any changes.
Yeah, I mean, without getting into it, I'm certainly not our regulatory lead. But, I think to your point, we're all running our business for today, right? Which is under today's circumstances, today's conditions, and certainly rescheduling is a benefit. But no one, I think that's in terms of leading operators, why there's a few select that are maybe separate and apart from the pack, is because those are the ones that have continued to shore up their business and are able to continue to operate and reinvest in today's conditions without having to hope or bet on rescheduling in the future.
I'm definitely not a legal scholar. I would say one of the things that everyone was complaining about was how long the process was taking to publish that initial notice of rulemaking, right? And one of the reasons why was because I think they were preemptively putting a lot of care and detail into preparing for future challenges, right? So you saw the Office of Legal Counsel memo, which was very extensive, and then now I'm going to go against myself and say I read this on the internet, but there was something that talked about DEA acknowledging the two-part test for currently accepted medical use, which was something that was new, just based on the data that has been collected from all of these state medical programs and all of the federal agencies in terms of cannabis as far as application of medical and then also safety profile. So both presidential candidates have said that they are in favor. I don't think any of us are taking rescheduling for granted. But where we are in the process now, it's come a very long way. Having that hearing on December 2nd, having that by-the-book opportunity to collect additional information on the record officially really just makes everything more bulletproof longer term. So, we can't guarantee anything, and we're not counting on it or designing our business around it, but this is the most momentum and the most progress that we've ever had as an industry. We have 2 presidential candidates in favor of reform. One of them says he's voting for Amendment 3. So, this is as good as it's been in a very, very long time. So, we have some cause to be cautiously optimistic.
And I'll just say, I'll echo everything, right? We're running our business from here's where the regulations are today, and until it's done, it's not done. So we continue to look at, the way we ran the business in 23, 24. Until it happens, we're going to run the rest of 24 and 25 the same way, right? And then once it happens, you get a little breathing room, you get the excess cash flow, put it back in the business, pay down your debt. It gives you something that you weren't planning on, to be able to utilize to move the business forward, increase shareholder value. Until then, it's kind of just grind and business as usual.
And I'm generally optimistic. It's just when I'm in investment risk manager mode, right? We always look at the overwhelming positive, but we have to focus on those negative comments. And those evangelicals are pretty wild.
I think they have to prove that they are harmed, though, to bring a case. So I don't know if you get somebody that, like a child that gained access that and then he brings the case. I'm not quite sure. But again, if it's a legal program, then the child shouldn't have, and he probably got it from Delta 8 or something, which they should sue Delta 8. But in my opinion, but I think the Chevron is a great thing to be cautious of, but I don't think just anyone can challenge it necessarily in this case.
Yeah,
I think
but there are always steps involved.
Yeah.
I think that's a perfect segue. We've heard a lot about deschedule and safer banking and the prospects, and they're going to help the bottom line. But what we're seeing is THCA flower loophole, Delta 8, Delta 9 is crushing the top line. We've lost $1 billion in revenue in Colorado, and some of that was bridging and going out of state. But really, you're looking at, if we don't close these loopholes, we are at the disadvantage, and we are paying 280E, and we are doing state level compliance and taxation and everything, whereas they are just crushing it, absolutely crushing it. So, what are we hearing about Farm Bill edits or closing that down? Are we just going to, all this work that we've done to protect the public and do it right, they are crushing us and selling weed to kids in Alabama. Everybody's ready to talk about.
I'm looking at the cloudy skies right now.
This whole week I've been hoping,
Well, Governor Newsom in California just signed a bill, right? That's outlawing hemp, right? What we need to see is the enforcement side of it. There's an article I saw this morning that I think San Francisco Gate went into stores up there and they still found, no sign of the enforcement. So at least in California, we need help on the enforcement side. And then again, from our perspective, we're looking at how do we legally, sell our product. If we say it's hemp outside the state, we would love, again, the regulations to put hemp and cannabis on a level playing field, and hopefully something as they debate the Farm Bill, and there are a couple different views of that. Something good comes out of Washington. It's hard to expect anything that comes out of there that's going to make any sense.
I think it's super frustrating when you're doing things the right way, obviously, and others aren't beholden to the same rules. But I know we talked a lot about educating investors. We also spend time educating lawmakers because they just have no idea that this stuff is going on. So, Minnesota realized they kind of messed up. I think I saw New Jersey just tried to make a corrective action. So it's slowly starting to happen, probably too slow, especially that this is like a true danger largely to kids. So it's frustrating, but all we can do is really try to keep educating when we get airtime with lawmakers, make them aware that this is, a huge issue for them.
Quick question. I'm Roz McCarthy, founder of Minorities for Medical Marijuana, and I'm going to go on a different slant. You guys are all about investor relations, and you have that connection, correct? Wanted to get your feedback on the importance of ESG. Is that still a driver for your investors, for the investment community? And also, what would that look like if you, in a perfect world, 280E is gone? can we get some commitments that those dollars, now that you are now more profitable, that your bottom line looks better, how can those dollars be translated over to that ESG side, and more importantly, to the social side that I'm more concerned about? And I want to see some commitments from the big companies to say we'll deploy dollars towards, because right now it has been, you guys are dying on the vine, but the advocacy and the social organizations and the impact that this industry has made, I mean, we've died on the vine. We're down here just on the floor, just kind of trying to figure it out. So I'll stop there.
Yeah, hi. So I would say a couple of things. The harsh reality is, because of the investor base that we have and the type of investors that we have, there is not a clamoring demand for ESG data. I can tell you there's virtually no demand for ESG data. And because we are grappling with different types of issues, but we also have limited capital that has to be allocated carefully. We have not done the type of data collection and reporting that you would see. I mean, I'm sure we've all looked at all of the larger companies, Fortune 500 companies, and their ESG. They have departments, and they put a lot of time and energy into collecting data and doing things. What's happening, at least in our company, that I can tell you is, we're doing a lot of things at a micro and a local level, especially in our production sites, which are just common sense things that save electricity, that save water, that save time, that save money, because we're getting smarter about how we're doing things, and it's just common sense. We are not collecting that data, though, because no one's really asking us to this point. There is a long road between where we are today and where we would be if all of the lovely things that we're talking about here, uplisting and all these things, that would open up a whole new set of investors, and even European investors potentially, who are much more inclined to ask about those type of things. So whether we're labeling it ESG or sustainability, or even just building a good company, and being good operators in the community. Today, the things that we're doing, we're not really capturing that data and sharing it out in an organized way, the way that we would need to.
What is ESG? I'm sorry, I don't know that.
Environmental, social, and governance.
So, to the extent we can, we try to influence policy, right? So Glass House, and I think most of the people up here are involved with Mission Green and Weldon Angelos, and we've hired people who've been in prison for an extended period of time to help their transition back into society. Our CEO, Kyle Kazan, who was a former police officer, is a big advocate and consistently pushes, trying to get Joe Biden and now Kamala Harris and Trump, if he wins, to release, federal prisoners, nonviolent cannabis offenders. So to the extent we can do that, that's where we're applying our voice. Environmentally, we're fortunate that the facility we have in California is a greenhouse. Number one ingredient is sunshine. It's free. We use well water. We recycle most of it. We have solar. We actually have power plants that are super efficient, and we buy gas, and we actually can sell electricity back to the grid. So there's like zero environmental footprint of that facility. It's like a city unto itself. But I would say, again, if you said do ESG reporting, we are still so far away from that.
I'll say the same, unfortunately. I mean, zero questions from our investors today, like zero.
Do you think that'll change though if the
Not until uplisting.
not to uplisting?
No. Yeah. So not much to add. I mean, obviously we have scope reporting coming up in a couple years with the SEC, but outside of that, we're very involved in our communities. So we do those when it changes.
Wondering what you see, because kind of, it's just something to track. That makes sense.
Yep, not until uplisting, I would say.
Thanks.
Cool. Well, that's time. Perfect. Thank you, everyone, for coming.